In this video, I'm going to give you a brief history of Centene Corporation, ticker symbol CNC. I'm going to talk a little bit about what they do, look at their affiliation with the World Economic Forum, touch on who their competitors are, and consider their stock metrics and future political hurdles. Hurdles sounds like turtles. So one of the things that helps investors get through tough economic times without selling at lows is to have a strong belief in the company they've invested in. If you feel the company you've invested in is too risky or will get crushed in tough economic times, you won't stick it out when things get difficult. Researching a stock won't make the business do any better. It doesn't work like that. What it does do is it stops you from doing something impassioned, like buying a bad stock or selling a good one. So what does Centene do? Centene is a low-cost healthcare provider that mainly does business in the US. They're competing in what's a $2 trillion healthcare market. They are the largest Medicaid managed care company in the US, as well as the #1 insurer in the nation on the healthcare insurance marketplace. They provide coverage to about 1 in 15 people across the US. That's a lot of people. They're also a Fortune 500 company. Let's talk a little bit about the history of Centene before we get into all the fun stuff. So I hope you know what exactly you might be investing in. It'll help you understand what little pieces make up the whole of Centene Corporation. Okay, so Centene is a government-sponsored healthcare enterprise. It was started in 1984 and went public in 2001. That's the year of I Could Be Your Hero, Baby, Enrique Iglesias. During the Double O's, they acquired Simpatico, which is a behavioral health services company, Buckeye Health Plan, and Opticare, a vision management services company. They acquired US Script, which is a pharmacy benefit management services company, Cardium, which is in disease management, Celtic Group, which is in commercial insurance, and they acquired CaseNet, which is in care management software. So in the last decade, they added Centurion, Acaria Health, and HealthNet. They also started the Ambetter and Involve brands, and the Allwell Medicare Advantage brand. Recently, Centene acquired WellCare in a $13.5 billion stock and cash deal. They're not just in the US either, they have a presence in the United Kingdom and Europe. So you can see they have a broad range of services. They don't just fall into one category. So one thing I thought was pretty interesting in their annual report, because it's so world-changing, is one study found that 3.6 million people miss their healthcare appointments because of transportation issues. That ends up costing the healthcare industry $150 billion a year, with a B. So in 2019, Centene worked with a rideshare company in 7 different states to test the non-emergency transport method, which should hopefully eat into that $150 billion. Hopefully they can reclaim their share of that $150 billion. So in a situation where it's not an emergency like an ambulance, they arrange for an Uber to come pick you up instead of having you miss that appointment, which ends up costing them a bunch of money. That's pretty exciting as far as the future goes. You make a doctor's appointment and an Uber comes and picks you up. I mean, it's not necessary for me. I would just go to my appointment. So I want to talk just very briefly about what Centene provides. So one of the things that they provide is Medicaid. The average person who enrolls in Medicaid is 16 years old, and it's going to reflect that age group. So they provide neonatal care, things of that nature. And Medicaid is funded by the individual state as well as the federal government. So next on the list is Medicare, which is for older people. The average person on Medicare is 70. That's funded entirely by the federal government. There's no state government involvement. And the medical expenses reflect that higher age group. So Centene also provides health insurance for people who may not qualify for Medicaid or other government funding. They also provide health care for military and veterans and correctional health care. Centurion provides healthcare and staffing services to correctional systems. Centene also has affordable dental care, vision plan services. They also have a 24/7 call-in nurse advice line. This is before the 2020 crisis and the Roni and all that. That's probably doing pretty good. So I also want to talk about the World Economic Forum, of which Centene is a strategic partner. So the World Economic Forum is a nonprofit foundation led and founded by Klaus Schwab, and headquartered in everyone's favorite town, Geneva, Switzerland. They engage the foremost political, business, and cultural leaders to shape global, regional, and industry agendas. That's according to their own website. That's according to them. Their slogan is committed to improving the state of the world. And I hope they are. I really do. So they have something called the Davos Manifesto. So the Davos Manifesto states that companies should pay their fair share of taxes, show a zero tolerance when it comes to corruption, uphold human rights throughout global supply chains, and advocate for a competitive, level playing field. So all of that seems pretty great. I can't really find a huge fault with the World Economic Forum. They seem pretty good. So let me know if I pronounce Davos right in the comments, because I have no idea. So the founder of the World Economic Forum, or the WEF, is the founder and inventor of stakeholder capitalism. There are three types of capitalism. There's shareholder capitalism, where the main goal is to maximize profits for the shareholder. There's state capitalism, which lets the government set the direction of the economy. Think something along the lines of China or communism. And then there's stakeholder capitalism, which positions corporations as trustees of society. So in a way, that idea is both incredibly offensive and immediately practical. It's offensive because we like to think everybody has some say. Our voting system is structured that way, where everyone has an equal say. But unfortunately, voting only affects governments, and governments have a pretty dicey track record of being beneficial. So it's practical because companies hold a lot of power, far more than the individual. They have a lot of energy and money behind them. A company like Facebook or Uber, they're charting new territories, and that means stepping on a lot of toes, but that's a natural outcome of progression. Not defending them, but working with these companies to forge a better future is kind of the only real solution. So whether you agree with it or not, stakeholder capitalism is gaining momentum. The US Business Roundtable has formally embraced it, and they're one of the most influential business lobbies around. And that's what investors want. Investors want socially responsible investing and ESG style investing. I wrote an article about socially responsible investing. You can find a link to it in the description below. Check that out if you have the time. So there's only 100 companies that are partners or strategic partners with the World Economic Forum. Among them are Johnson & Johnson, Facebook, Uber, Alibaba, Bank of America, Cisco, Microsoft, Visa, and that's all great, but the way that the World Economic Forum is funded is through the strategic partners and other donors. Strategic partners end up putting up like $500,000 to be strategic partners. But that's because they believe in what the World Economic Forum is doing, supposedly. So you gotta remember that the World Economic Forum is exactly that, a forum. There was no internet back in 1971, so having a forum made a lot of sense. So it's a place to exchange ideas, problem solve, and come up with mutually beneficial solutions. So that forum may have been where Centene met a particular ride-share company, Uber. I'm just saying Centene and Uber would have been at the same forum discussing similar problems and solutions, so it's highly likely that that's where all of that came up. Anyways, back to Centene. So if you're concerned with the future and socially responsible investing, Centene's probably a good company to look into. I think they got that one in the bag for the most part. Let's talk a little bit about their competitors. Among their competitors would be companies like Humana, CVS Health, UNH, United Health, Anthem. So as far as investing goes, Centene is a growth company, and growth companies generally come with more volatility. Also, a lot of growth companies tend to not be profitable. I'm thinking of like Uber, those type of companies. But Centene is a profitable company. I totally forgot what I was saying. So from what I can see, in areas like foster care, long-term services, correctional health care, and health insurance, there's a lot of room for expansion, even just in the US. And over the course of 5 to 10 years, I think there's a lot of room to grow. So Centene's grown its revenue, or top line, from $22 billion in 2015 to $74 billion in 2019, which is a very big increase in a very short period of time. They've grown their assets from $7 billion to $40 billion in the same period of time, and their memberships increased from 5 million in 2015 to 15 million in 2019, and now with the purchase of WellCare, it should grow to about 23 million. It's a lot of people. So Centene has incredible growth, but has very low margins. So the net margin is the percentage of money that a company actually keeps after all expenses are paid. And you can find out more about net margins if you're interested in an article I wrote, and there's a link in the description. So even though they bring in about $74 billion in revenue a year, they only keep around $1.3 billion. So that gives them a net margin of 1.77%. So regardless of how expensive you think American healthcare is a pretty low net margin. So at the other end of the spectrum, you have a company like Visa, which holds on to 50% of all the revenue they make. So low net margins could be perceived as a negative because they're not making as much money or their pockets ain't swole. It's important to note that their margins are consistent. Because their margins are low, it could allow them to undercut the competition. So if you think about it, if a company wanted to make phones and compete with Apple, they'd want to make a phone that's as good as Apple's iPhone or better and then sell it for less. That way, a whole bunch of people will buy the phone, they'll come into that ecosystem, and then they'll get used to that ecosystem, and they won't ever leave. Then, once they have a large share of the market, they can jack up the prices a little bit at a time, and they can bring up their net margins. Now, a lot of companies do that where they are actually not profitable, and they end up relying heavily on investors to fund that unprofitable campaign. But if you can do it in a way that is profitable, it's even better. I personally, I've had a health insurance for quite a while. I've never tried to change my health insurance. It changed one time, the company changed it, but I've never personally tried to change my health insurance. It was a one-time decision. It's kind of it. And I think for most people, it's a one-time decision. So that seems to be the way of growth. All things being equal, a company with lower profit margins can do business less expensively. And then they use the money they do make to fuel growth through acquisitions. And then when there's no more growth to be had, they feel free to raise prices. And eventually, those growth companies transition into dividend-paying companies. So you saw that with Apple. They were a growth company for quite a while, and then eventually they started paying a dividend, and they'll probably raise that dividend over the course of time. Anyway, that's just the circle of life for a business. So specifically with Centene, they started the Centene Forward Initiative in 2018. And that's to look for inefficiencies. They use those found inefficiencies for margin expansion. And none of that's very surprising considering how large their margins are and that they're a growth company who fuels their growth through acquisitions. None of that's very surprising. So granted, mergers in the medical industry are very difficult because they have a lot of moving parts, but Centene seems to be doing it pretty effortlessly. So here's a word of caution. An initiative like Centene Forward looks great on paper, but in real life, it could go pretty badly. And I hope it works out. I really, really do. I hope they pick the best person or group that are right for the job and are close to the action, and that they know what they're doing. I hope they don't pick people who are concerned with numbers and really have no idea about what exactly is going on. So in real life, these types of situations can lead to managers tinkering around with things that they don't really understand and costing the company money, their best employees, but most importantly, it ends up costing them customers. I'm not saying this will happen. I'm not saying this will happen with Centene. I hope it doesn't, but the risk is present. It's a very real risk. So remember when I said that net margins were the percentage of revenue that a company actually keeps? There is one caveat to that statement. So if you look at a company's income statement, and you work your way down from revenue all the way through all the deductions, and you get to the net income. Everything's been deducted except one thing, one very important thing, and that's the dividend. So a company still has to pay dividends out of their net income. Not the preferred dividends, but the dividends to the common shareholders still have to be paid out. So when you compare a company like Centene to a company like CVS or United Health, I keep wanting to call it UNH, those companies are paying dividends, whereas Centene doesn't pay a dividend. You should, in order to make it fair, deduct the dividends from CVS or UNH, United Health, because that's the way to level it out. So in the case of CVS, they pay out about 28% of their net income in dividends, which is a pretty substantial amount. So that means even though they make somewhere around $256 billion, they only keep about CVS's net margins are about 1.84%. compared with Centene's of 1.77%. However, UNH, which has a similar revenue to CVS, has net margins of 4%. That's after deducting the dividend. So aside from the competition, there's other factors to take into account, like political headwinds, giggity, largely due to the American elections. So candidates like Bernie Sanders and Elizabeth Warren, who were pretty socialist in their leanings, were viewed as bad for the healthcare sector. And it's hard to say what President Trump has in store, whether he'll replace Obamacare or just fix what's broken with it. The Republican Party has tried recently to move the administration of healthcare from the federal level to the state level, but that never got past the Republican-controlled Senate. And assuming Trump wins re-election, which I think he will, it's hard to say what that will mean for the healthcare sector in general or Centene specifically. And if you want to read an article on why I think Trump will be re-elected, and it's just a numbers thing, look for my article in the description below. So the elections, government regulations, and changes to the healthcare system will be risk factors moving forward in the near future. And government-sponsored healthcare is Centene's main focus. So just be aware of that when you're investing in it, that what the government does will be somewhat of a big issue. So what I'm saying is I believe Centene is a company that you should put on a watch list, and if it goes on sale, consider buying it. The sales don't happen every day, but they do happen pretty frequently. But the problem with a sale is during one isn't a good time to start researching companies. That's when you want to have your finger on the button. You should already know what you want to invest in before the sale comes along. And when to buy also depends on your time horizons. If you're a long-term investor, say 5 to 10 years, you might not really mind buying at what is currently a high because you expect it to be quite a bit higher in 5 or 10 years. So provided the government doesn't destroy Centene's ability to be profitable and that they carry on with their growth strategy, I think you'd be very pleased buying Centene. However, they are one of the only companies I've bought during the 2020 crisis that have actually gone up in value. So are they relatively cheap right now? No. Now that being said, they did recently just take a hit with the stock falling from I think of a high of 74 down to about $66. And that had to do with their Q1 or first quarter results. And Q1 wasn't particularly great, largely due to the 2020 crisis, and also due to their purchase of WellCare, which on the one hand raised their revenue but hurt their net income. That being said, their subsidiary Centurion won a contract with the Department of Corrections in Kansas, and Centene's health insurance marketplace sales increased, and the company expanded most notably in Pennsylvania and Iowa. I think they're a great buy. Let me know what you think in the comments below. I hope you enjoyed the video, and I hope to make a whole bunch more of these. If you like what you saw, give me the thumbs up and subscribe. And don't forget what I told you.